So the IRS is cracking down on third-party payments networks like Venmo and Cash App. Starting this year, payments of $600 or more for goods and services must be reported to the IRS. So Naomi, I'm going to throw this right down to you. What do you make of the story, especially since apps like this are starting to offer crypto services, whether that's trading or crypto payments? What do you make of this? $600 or more need to be reported to the IRS.
Well, I think that the cash reporting requirements are unconstitutional. I agree with Jerry Brito from Coin Center on that. The only reason that they were able to push those through originally was because of the third-party doctrine, where they could basically force banks to do those reporting requirements. And that's what you're seeing here. They're forcing these third parties like Cash App, Venmo, Zelle, all of that to do these reporting requirements. I think it's crazy. And to report payments over $600 when initial reporting requirements were even put out. If you take into account inflation, the amount in real value was actually so high that people were like, well, we're never really going to get to that reporting requirements. That's just for crazy things, if anything's out of the ordinary. Now that we're bringing that actual amount down further, and inflation on top of that is taking the actual value in the opposite direction, we're getting to this crazy state where every single thing we do with our money is being tracked and observed and monitored. And that's a scary state of affairs for me. We should not have blanket surveillance on our financial actions. That's kind of a totalitarian nightmare there. But I'll throw to you, David, for your thoughts.
First, co-sign everything you just said. Absolutely, this is nuts and bad. I would also point out that the third-party doctrine point that you made also applies to a tons of other kinds of data that is being gathered around about us all the time. Whether you're talking about, Facebook social data or like video cameras on light signals being used by police to track immigrants. So that's a big other set of issues that are all related. I think I'll go further and talk about, the risk here, even if you believe that businesses should, be forced to accurately report their revenue to the IRS. The real problem here is that you're creating a privacy honeypot that these companies are gathering, and that, regardless of what the intended use is, becomes a risk to users on a day-to-day basis, even people who are not business users. And to sort of bring it back to crypto, the takeaway here is this is possible to enforce because these are financial intermediaries who themselves have access to all of this data about you and can basically do whatever they want with it. And so it again kind of I wouldn't go so far as to say that it makes the case for crypto specifically, because obviously crypto has all kinds of built-in transparency in many cases. And so, you're not necessarily going to get total secrecy compared to this. But it does make the case more generally for the idea that financial intermediaries create risks and weaknesses in the system and for individual users that we have to be very cautious of. So I see Zach nodding your head. You want to jump on and pile on?
I'll pile on a little bit. I think it's a real bummer that this is happening. I do think the thing that you mentioned about transparency is really important, because I think the transparency of blockchain and public blockchain networks is one of the things that is working in its favor in terms of arguing against sort of these overreach regulations, right? I think what we're seeing from financial regulators around the world is the desire to sort of import these existing regulatory regimes onto these public networks. And I still think, despite what Naomi is going to say about the need for financial privacy, I still think the transparent and public nature of these blockchain networks is the greatest strength in saying, hey, we don't need these regulatory regimes implanted on top of these networks. They exist in a self-regulating fashion that is fully predicated on these being open and more transparent systems than the intermediaries that we're talking about here. But I will toss it to Naomi. She's going to dunk on me, and I am ready for it. Hit me.
I can't wait.
Get ready for the dunk, Zach. Yeah, well, I'll just go back to what Snowden said. He has this pithy statement where that's the dunk. I don't know how to dunk. Snowden has this pithy statement where he says, they're called public servants and private citizens for a reason. That is how they should be dealt with. But currently we have this opacity in government where we don't know what's going on. We have no audits of the TARP bailouts from 2008. We have no audit of the Federal Reserve. We have no idea, into what politicians' coffers all of our money is going because there's so much opacity there. And where private citizens now have everything public. And it's just a really scary turning the tables of power. That's the reason why we have, like the Fourth Amendment, for example. There's a reason why people are enabled private spaces in their life, because otherwise the balance of power in society just gets completely upheaved, and the government has way too much power because they have way too much information. So I think it is a scary state of affairs, and I would actually encourage people to move away from the public blockchains and into privacy coins where everything is opaque and you can reclaim some of your financial privacy. But just my two should I call them two Satoshis, two Zeks? Like what do I say there? What's the Satoshi form of a Zcash? I'm gonna work on that. Is it like a Zuko? No, I'm gonna think about that. I'll get back to y'all. But a Zooks, that's my Zooks.
Naomi and her two Zooks. We should have a new segment.
Zuko Wilcox on that one. We got to get Zuko on the show and be like, Zuko, what are we talking about here?
Zuko.
Anyway.
Yeah, exactly. Or Nathan, or any of the Zcash people. But I'll throw it back to you, Jen, for final thoughts.
Yeah, I mean, I agree with everything everyone is saying. David, I had a question for you. Based on what you were saying, one of the solutions that was outlined in the article, not solutions, but I guess we could call it a solution. One of the solutions that was outlined in the article was that anyone who's operating a small business who are using any of these third-party intermediaries should just separate their business finances from their personal finances. Can you just build on what you were saying for small business owners who use these third-party apps? Is that a solution for the interim?
I mean, I don't see how that's a solution, because we're talking about risks to layers of interlinked personal data. I mean, if you just set, it's pretty similar, I would imagine, to a Bitcoin wallet, where if you just set up a parallel wallet, but you're then moving stuff back and forth, I mean, the connections are still there, so that they, theoretically could be traced back to you. I mean, there is something to that, but I'm not sure that the regulation actually makes a distinction between personal and business applications that are over $600. So I can't speak to that specifically. That's not a solution. I'll just say that.
Yeah, I'll also add that there's such a burden placed on small businesses who have to abide by ridiculous requirements, overreaching regulation. I mean, too much reporting requirements, these businesses lose out on their very, very slim profit margins because they have to put more money into compliance than they do into actually growing their business. And that's really sad to see, especially in a time when so many people are hurting from the pandemic and from business shutdowns. Like, we should be helping businesses right now, not adding more burdensome regulations onto them.